Hello and welcome to another session of the My Solo 401k Financial, My Community Daily Webinar Series. If you have questions or topics you wish to discuss, please chat those over so we can go through those sequentially. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So we're back again for our second daily live webinar of the day. We had one earlier. This is our second session. It's our live Q&A session with My Solo 401k Financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic, Altruist RIAs. Open a solo 401k in 2026 and still fund 2025 Mega Backdoor Roth solo 401k contributions. This is your chance to get answers. Please use the chat now to ask questions on today's topic or anything else. Please chat them over now so that we can be sure to get to them all. Let's get started. And as we're going through the slides and the questions, if the information is helping you feel more secure about your retirement or is otherwise helping you, please like this video, as it helps us to get the word out to other solopreneurs like yourself, other advisors who might be looking to secure their own retirement account or looking to help clients secure their retirement account. So we greatly appreciate that. Whether you're on LinkedIn or YouTube or X or Instagram, please like this video. So let's dive in to the slides. And again, if there's questions that you brought or anything that comes up as we go through the slides, please don't hesitate to chat it over, because if you have a question, somebody else probably has the same question. So it's definitely going to be helpful. So as always, let's start it out with the eligibility. A solo 401k is for a self-employed person that doesn't have any non-owner, non-spouse, full-time W-2 employees. So there's two elements to be eligible. There's two criteria. One is you need to be self-employed. And the way that you demonstrate that is by reporting earned self-employment activity on your tax return. So this could be done in different ways. For example, if your business is taxed as a sole proprietorship, let's say you're a 1099 independent contractor, or maybe you have a single member LLC that's taxed as a disregarded entity. Well, for those individuals, they report earned self-employment income on Schedule C of their 1040. Let's say your business is taxed as an S Corp or a C Corp. Well, in that case, earned self-employment income is the W-2 wages that you receive. So if you receive W-2 wages from your S Corp or your C Corp, could be an LLC taxed as an S Corp or a C Corp. Lastly, if your business is taxed as a partnership, let's say you file a Form 1065, earned self-employment income would be income reported on line 14 of the K-1 that you receive from the partnership. So that's the first part of the eligibility criteria, is that self-employment activity. The second part is that you cannot have any eligible employees other than yourself or another business partner or a spouse. In other words, you cannot have any non-owner, non-spouse, full-time W-2 employees. So those would be individuals that are 21 years or older that are working as a W-2 employee. So contractors is not going to stop you from having a solo 401k. You can have as many contractors working as much as they work, and it's not going to stop the individual from maintaining a solo 401k. It's not going to stop the individual from setting up a solo 401k. But if those individuals were working on a W-2 basis, if they received a W-2, that could prevent them. That could prevent the self-employed person from being able to set up a solo 401k. It would prevent them if those individuals were working, they were 21 years or older, and they were working on a full-time basis, meaning they were working 1,000 hours a year with 1 year of service, or 500 hours a year for 2 consecutive years. So your spouse can work in the business. You can have another business partner working in the business as a W-2. You can work in the business as a W-2, and all that's fine. You just cannot have any non-owner, non-spouse, full-time W-2 employees. So the late start reality check is for those that are still interested in making 2025 solo 401k contributions. So this would be in the context of an advisor, right? Because we're talking about altruist RIAs. So financial advisors, CFPs, etc., wealth advisors who custody at Altruist. Can they still set up a solo 401k for their clients and be able to make 2025 Mega Backdoor Roth solo 401k contributions? The answer is yes. So if they had set up the plan for their clients, or if their clients had set up a solo 401k on or before December 31st of 2025, they would have preserved the ability to make all types of solo 401k contributions, regardless of how their business is taxed. Employee, employer, voluntary after-tax contributions, all types, by their business tax return deadline, including any timely filed extension in 2026. But if they didn't set up the plan by December 31st, 2025, which for our clients, that was just a matter of signing up. You didn't have to open up the accounts. You didn't have to make the contributions by December 31st. You just had to sign up. But if you didn't even sign up by December 31st, 2025, now the question is, well, as a late starter, can you still set up a plan and make 2025 solo 401k contributions? Well, if we're talking about Mega Backdoor Roth contributions, that specifically means then making voluntary after-tax solo 401k contributions. And it is still possible to set up a solo 401k and make 2025 voluntary after-tax contributions. You could still set up a solo 401k in 2026 all the way up until the business tax return deadline, including any timely filed extension, as long as you made those voluntary after-tax contributions by that business tax return deadline, including any timely filed extension for 2025. So it's still possible to set up a new plan and make 2025 voluntary after-tax contributions. Now, if we're talking about other types of contributions, like employee contributions, that's a different story. So unless your business is taxed as a sole proprietorship, let's say your business is taxed as an S Corp or a C Corp or a partnership, then it's too late to set up a new plan here in 2026 and make employee contributions. But if your business is taxed as a sole prop, it could be just an unorganized business or a single member LLC that's taxed as a sole proprietorship. In other words, it's taxed as a disregarded entity. You could still set up a plan and make employee contributions for 2025, but you would have to do that and make those contributions by April 15th. Now, if we're talking about employer contributions, voluntary after-tax contributions, it's not too late, regardless of how your business is taxed. So even if it's taxed as an S Corp or a C Corp or a partnership or a sole prop, you could still set up a new plan here in 2026 and make employer and or voluntary after-tax contributions for 2025 by your business tax return deadline, including any timely filed extension. Now, for those that are custodying at Altruist, which is our focus here, what's great is that Altruist will open up the accounts very quickly, right? Especially relative to some of the other providers. So they'll typically do it in a day or so. Now, that doesn't necessarily mean you want to wait until the last second, but that does give you some time, right? You got plenty of time, especially sitting here in January, to open up an account here in 2026 and make those voluntary after-tax contributions for 2025 by your business tax return deadline, including any timely filed extension. So the 100% voluntary after-tax strategy is perfect for those late starters, because with the 100% voluntary after-tax strategy, you're not making employee contributions. You're not making employer contributions. You're just making 100% voluntary after-tax contributions. And you can contribute 100% of your self-employment compensation, dollar for dollar, up to the overall limit, which is $70,000 for 2025, as a voluntary after-tax contribution. No December 31st setup is required. So even if you didn't sign up, even if you didn't set up a solo 401k during the calendar year of 2025, you can still set up a new solo 401k plan. And then based on your 2025 self-employment income, you can contribute 100% dollar for dollar as a voluntary after-tax contribution, not to exceed the overall limit of 70,000, and you would just need to make that contribution by your business tax return deadline, including any timely filed extension here in 2026. Now, the Mega Backdoor Roth Solo 401k strategy is a two-step process. You first deposit the voluntary after-tax Solo 401k funds into a separate voluntary after-tax account. So this would be a separate account, for example, on the Altruist platform, specifically for your voluntary after-tax Solo 401k funds. It's a retirement trust account that's specifically set up for people that are bringing their own plan documents. So clients get their plan documents from my Solo 401k Financial, then they open up their accounts at Altruist. So Altruist is just providing the holding account. You're bringing your own plan documents with you. So that voluntary after-tax Solo 401k contribution would need to be deposited into a separate voluntary after-tax account. That's step one of the Mega Backdoor Roth Solo 401k strategy. Step two is to transfer the voluntary after-tax Solo 401k funds to a Roth account. Now, with our Solo 401k plan, with the Solo 401k plan provided by my Solo 401k Financial, you have options for that step two. So those voluntary after-tax Solo 401k funds could be transferred either to a Roth Solo 401k, so that would be a second retirement trust account at Altruist, opened up under the name and EIN number of the plan. We obtained the EIN number as part of the onboarding process. Or the other option is that those voluntary after-tax Solo 401k funds can be transferred out of the Solo 401k to a Roth IRA. Could be a pre-existing Roth IRA, or it could be a new Roth IRA. In either case, that second step, that transfer of voluntary after-tax Solo 401k funds to the Roth account, whether it's a Roth Solo 401k or a Roth IRA, that second step is reportable. It's not taxable because we're talking about voluntary after-tax Solo 401k funds. It would only be taxable if there had been gains that accrued while the funds were in the after-tax account, but there's no waiting period, so the funds could be transferred right away to minimize, possibly eliminate any gains, but it's still reportable. So we handle that reporting, the 1099-R that needs to be issued. We handle that for no additional charge. Clients or their advisors just have to let us know about that after-tax to Roth transfer, and they can do that simply and easily on our website, mysolo401k.net/forms. You'll find forms that could be submitted 24/7 to give us the information we need so we can add the plan to the queue to prepare the 1099-R. So again, it's a two-step process. You first deposit the after-tax funds into a separate after-tax account before they're moved to the Roth account. So the first step, the voluntary after-tax Solo 401k contribution, that does not need to be reported. It doesn't need to be reported on the W-2. Let's say their business is taxed as an S Corp or a C Corp. It doesn't need to be reported on the personal return or the business tax return. But the second step, when you move the voluntary after-tax Solo 401k funds either to a Roth Solo 401k or a Roth IRA, that does need to be reported. But what's great is if you work with my Solo 401k Financial, we'll handle that. And we'll do that for no additional charge. Clients or their advisors, again, just have to let us know by submitting the online form. So the big advantage, so understanding the purpose of the Mega Backdoor Roth is that you're taking advantage of the ability to make much higher after-tax contributions, right? That voluntary after-tax Solo 401k contribution limit is 10 times, for example, the Roth IRA limit. It's multiple times even the Roth 401k limit. So your Roth 401k limit is the employee limit. For example, $23,500 for 2025. There's no income limit. So regardless of how much money the solopreneur makes, they can still maximize that voluntary after-tax contribution as long as they have the self-employment income to justify the contribution. Contrast that with the Roth IRA, where if you make too much money, you're phased out. You're not eligible to make Roth IRA contributions. But the foundation is that you need to have a Solo 401k plan, like the one offered by my Solo 401k Financial, that allows for the voluntary after-tax contributions and then allows for the in-plan conversion to a Roth. So you first want to put the money into the after-tax account to take advantage of those much higher contribution limits. And then the individual wants to move the money to a Roth account so that now you can invest it. And just like any Roth account, you get that potential for tax-free growth. As long as at the time of the distribution, it's a qualified Roth distribution, you'll be able to withdraw all the money totally tax-free. So all the subsequent gains that accrue over the years can be tax-free. So let's go through a simple scenario to understand the math. We talked about how you can contribute 100% dollar for dollar of your self-employment income. We talked about how you don't have to make employee deferrals. You don't have to make employer profit sharing contributions. So if you didn't sign up by December 31st, if your goal is to make Mega Backdoor Roth contributions, that's no big deal because you're not even interested in making employee contributions. You're not interested in making employer contributions, and you can still set up a new plan here in 2026 and make those 2025 voluntary after-tax contributions. So as long as you have that earned self-employment income to justify the contribution, you can contribute 100% dollar for dollar. Just do a pure voluntary after-tax. Skip the employee, skip the employer. Just have to make that voluntary after-tax contribution by your business tax return deadline, including any timely filed extension. You just need to have a plan like the one offered by my solo 401k financial that supports the structure, that supports the strategy. And ultimately, the result is you've got a significant amount of dollars, especially relative to your other Roth options, in a Roth account with that tax-free growth potential. So again, the foundation is the plan documents. That's where my solo 401k financial comes in. We were the first solo 401k provider that offered a solo 401k plan that supports the Mega Backdoor Roth. So you need to have those plan documents that allows for the after-tax contributions and then the in-plan conversion, either to a Roth solo 401k or a transfer out to a Roth IRA. And then, of course, you're going to want to work with a provider like us that has all that experience. No one has experience more than us because we were the first provider to offer a plan that supported the Mega Backdoor Roth. So we'll help you through those technical steps. We also provide the ongoing compliance support in handling the 1099-R, and we do that for no additional charge, right? Other providers, for example, may not handle it or may want to upcharge you for the 1099-R. Now, the role of Altruist is to provide the custodial platform for managing client assets. So it's not for direct individual investors. You need to work with an advisor that custodies at Altruist. So they can most certainly custody solo 401k accounts for people like our clients who bring their own advanced solo 401k plan documents. They offer same-day account opening. They offer easy funding, like, for example, via Plaid. They support the multiple sub-accounts. So they'll support the after-tax, plus the Roth, plus you may have a pre-tax account. For example, some folks want to diversify. They may want to make some contributions as a pre-tax contribution and other contributions as a Roth or a Mega Backdoor Roth contribution. Or they may want to consolidate and roll over pre-tax funds from another retirement account, like a pre-existing IRA or a former employer plan. So implementation for those Altruist RIAs is first, of course, verify eligibility. That's why we talked about that at the outset. A solo 401k is for a self-employed individual that doesn't have any non-owner, non-spouse, full-time W-2 employees working for any business owned by that person or a spouse, if any. Number two, select a provider like my solo 401k financial that supports the Mega Backdoor Roth, that has that also is totally portable, right? We don't hold or have access to our customers' accounts. So we are super compatible with advisors who, of course, want to custody at Altruist. Open the brokerage accounts at Altruist, make the contributions, and then if you're making the voluntary after-tax contributions, it's a two-step process where you then need to convert to the Roth, and then let us know about that transfer so we can capture the information we need to be able to prepare the 1099-R. And then, of course, a bonus of working with my solo 401k financial is that we were the first provider not only to support a plan that supports Mega Backdoor Roth contributions, to offer a plan that supports Mega Backdoor Roth contributions, but we're also the first solo 401k provider to offer a plan that allows the solopreneur to claim $1,500 in solo 401k tax credits. So those are tax credits, not tax deductions. So it's a dollar for dollar reduction in the solo 401k owner, the solopreneur's tax liability. It's $500 per year for 3 consecutive years, which is going to more than cover our fees for the first 7 years. Our fees are totally flat, regardless of the support, regardless of the value of the account. We charge $650 as an initial cost. That includes the $525 establishment fee plus the first $125 annual fee. Then starting 12 months later, we charge our $125 annual fee that covers the second year. So if you added up all of our fees over the first 7 years, it wouldn't even amount to $1,500. So that's when I say those $1,500 in tax credits is going to more than cover our fees for the first 7 years. So it makes it super affordable. We've got another example just to help emphasize it. And if this is helping you, if this is helping you, your advisor, you as an advisor for your clients, please like this video as it helps us to get the word out to others like you. We would really greatly appreciate that. Please like this video on LinkedIn or YouTube or X, Instagram, wherever you're watching. So let's assume you got an owner, age 45, they earn $250,000. If they skip the employee, which if they didn't set up the plan by December 31st, no big deal, even though they lost out on the ability to make employee contributions for 2025 unless they're a sole proprietorship, they're not even interested in making an employee. They skip employer. They just make 100% voluntary after tax up to the overall limit of $70,000. They convert the $70,000 to the Roth. So now they have $70,000 in tax-free growth potential, which being age 45, they got a number of years of runway to grow that account. So you can see that it can be very powerful. Key considerations, again, you start with the documents, like the ones offered by my Solo 401k Financial. And of course, it makes sense to work with a provider like us that has the experience, that provides the support, helping clients and the advisors through those specific technical steps, and with the compliance support, like the 1099-R, the 5500 EZ, because once the value exceeds $250,000, they're going to have to file an informational tax return called a Form 5500 EZ, which we handle that, and we don't charge any additional fee for that either. Clients or their advisors just have to let us know once the value exceeds $250,000. So that's a key consideration because the penalties for not filing are tremendous, $250 a day. But all you got to do is let us know. We'll add you to the queue to take you through the 5500 EZ filing process, where we end up filing it under the electronic filing system to make it easy for the customer. Issue the 1099-R for conversions, right? We talked about how you got to let us know by just submitting the form on our website. It just takes a minute to give us the information we need, and then we'll do that for no additional charge. Convert those after-tax solo 401k funds quickly to limit taxable earnings. So most clients are not looking to invest via that after-tax account because any gains that were to accrue in that after-tax account will be taxable, but there's no waiting period, and you can quickly transfer those voluntary after-tax funds to the Roth account and then invest via the Roth account so that you got that potential for tax-free growth. So some mistakes and pitfalls. So not having a plan that supports the after-tax, that doesn't support the conversion, delaying the conversion. So you end up with gains that accrue inside the after-tax account. Just misclassifying contributions, exceeding limits. We provide tremendous support to our customers, to their advisors in terms of educating them on the contribution rules and how it specifically applies to their situation. Using only a brokerage without the full plan, right? You don't want to start with the account, you start with the plan. That's the foundation, and then we help you open up the applicable accounts. Missing the 5500 EZ once the value exceeds $250,000. So again, the My Solo 401k Financial Advantage is that we have the plan that allows you to make the Mega Backdoor Roth contributions. We also offer a plan that is eligible for the tax credits, $1,500 in tax credits. We provide the compliance support. And then on top of that, other top use cases would be the ability to invest in alternative investments, the ability to take a solo 401k participant loan. All right, that takes us to the end of the slides. Again, if this is helping you, please like this video. Please subscribe, as we do go live every day, so you get notifications of when we go live. You can come and ask questions or just hear the content that we come to share each and every day. We also want to invite you to our community. We have the largest community of solopreneurs, solo 401k owners, their advisors. We've got over 32,000 members. So it's a vibrant community. There's forums, there's a library of videos and webinars. It's totally free to join. All are welcome. Just go to mysolo401k.net/my community. All right, it looks like that's it for today's Solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this Solo 401k community. We'll be back here tomorrow with more crucial content to help you secure your retirement.